Hello and welcome to this training video on the 3 steps to build a virtual family office through CPA partnerships. My name is Anthony Anderson. If I haven't had a chance to meet you, I'm a co-founder of a company called Elite Resource Team. More about that in a few minutes, but let me start by just specifically saying who is this video designed to speak to, and then again, who it's not actually built for. So it's built for wealth managers and insurance agents that are focused on bringing more value to their clients, that are serious about building an actual business. We call it having the CEO mindset, that want to build a 7-figure practice, and if you're already there, let's double it. Who is it not for? It's not for advisors that are unwilling to change. The industry is going through a lot of different changes and evolutions. It's not really built for an advisor who is looking to make excuses or looking to complain, and it's certainly not for an advisor who's looking for a get-rich-quick scheme. This is an actual amount of work that is required to evolve your practice, but I think it is well worth it when you start to understand what this ultimately can look like. So with all that said, let me give a little preview of kind of the 3 steps that we're going to go in. The first one is really starting off by talking about the virtual family office, what we call experience. And really, what does this look like for you? The second is talking about the difference between local and national relationships. Which specialists do you need in your family office on a local basis, on a national basis, and how do you actually find them? And then the third is looping back in here to the CPA aspect. Where does a CPA fit in? How do you actually build that relationship? And then as a bonus at the end here, what I'm going to go through is kind of 5 keys: identify, contact, engage, monetize, and then finally maintain the relationship with the CPA. Through this video, we will be sharing some past experiences with advisors as well as our own experiences. And I do need to say, from a disclaimer perspective, this is not your average advisor. These are advisors that were willing to put in the work and actually work with us and follow our training system in order to create results. I'll show you one of those types of advisors right now. David tried multiple partnership programs with CPAs with really no success. The first case he closed with a CPA through our model resulted in 3 annuities, totaling $5 million for that one client. He has since closed dozens of cases with CPAs and specialists, including 7-figure target premium. There's a copy of a text message he sent us not that long ago. $470,000 of target premium in the last 3 months, plus 32 open cases from my CPAs. That's all working within the virtual family office and the specialists that he has formed relationships with. Here is a copy of one of the life insurance applications that he had submitted. Look at this client, 11.2 million net worth, $650,000 of annual income. That's a pretty incredible client to have an opportunity to work with through a CPA. This life insurance policy was over $100,000 of target premium. In addition to feedback from advisors as we're going through this, I will also share with you some feedback from accountants. Here are 4 different accountants. You can see a number of additional ones if you actually go to our website. But here's 4 accountants that have worked with advisors in our community throughout North America, right? Jeff, Amy, Jake, Samantha, you can see different comments that they give there about how this has radically changed their ability to deliver more value to their clients. Now let's talk for a second about what happens if you don't do this. The bottom line is the wealth management and life insurance industry is being commoditized, which means it's going to continue to get actually harder and harder to make a good living, while your marketing will continue to get more expensive. That doesn't sound like a very fun proposition to me. Let me take a step back and give you a little bit about my story. So we rewind back to the early 2000s, and I'm applying for my first position at Merrill Lynch, and I don't get it. The managing partner at that office told me I lacked confidence and sales experience. So ultimately, still wanting to get into the finance industry, obviously I knew I needed to get more sales experience. So I went out, got a sales job, Cutco Knives, some of you probably recognize it. Started selling knives to friends, family members, door to door, cold calling. Ultimately, that did build up my experience and my confidence over the course of about a year. And I eventually went back to Smith Barney. Smith Barney accepted me as a free intern, super exciting. I was introduced to some of the big producers in the office there, and I realized that quite a few of them had been building CPA alliances. Many of you might not know this. Smith Barney is the oldest CPA alliance program out of any of the wirehouses. And so I was introduced to that idea fairly early on in my career, but I still lacked a little bit of that experience and probably maturity to go out and start building CPA relationships. Wirehouse environment wasn't really the right fit for me, a little bit more entrepreneurial, and so I went out on my own. And some of you who have gone independent probably understand what I'm about to describe. Going out on my own meant dinner seminars, buying cold leads, trying to get referrals, again, from friends and family, trying to do some radio programs, and it was a bit of a struggle. So over that 4-year period, I had in the back of my head that I really wanted to build my practice through CPA relationships. Eventually, along the way, I was introduced to Ken Smith. Ken and I met at a CPA symposium, and I just kind of kept chugging away at a couple CPA relationships, and eventually I got to the point where I had 100% of my business coming from 3 CPAs and 1 attorney. At that point, my only marketing costs were, in essence, a few lunch meetings and essentially social events. Got to the point where I had more business coming in than I could really handle. So Ken and I kept chipping away at this and eventually grew it to the point where we were doing about $1.6 million in revenue. It's coming from insurance, AUM, planning fees, specialist fees. Here's a couple examples actually of some of the initial cases that I was able to close through CPAs. Now, once those cases started happening, here's what they looked like. A $500,000 fixed indexed annuity, and at the time that paid me 7%. So that was 35 grand, that one right there. And then the next one, $1 million, which was a rollover from a profit sharing plan of $1 million. And that again paid me 7%. That was with Aviva back in the day, and that was a $70,000 payday. And then I had a Target Life case. This was the 3rd case that I had done with the CPA. It was about a $180,000 target, which at the time paid me 110% commission. So that was $198,000. So 0 revenue for 18 months. But then within the next 3 months, I closed 3 major cases, which brought in over $200,000. So once those relationships really turned on, they obviously got pretty exciting. Also started building relationships with other specialists. It took me a couple years to figure this out, but by really associating myself with other professionals, which eventually evolved into the virtual family office, I started also receiving a lot of referral checks. This is actually a copy of all of these checks spread out on my desk that show just different amounts coming in from different specialists within my virtual family office that I'd been working with. As things continued to evolve, I had the opportunity to present at different conferences for advisors and accountants across the U.S. Also, really neat experience of partnering with some of the top CPAs and thought leaders in the space at the time, individuals like Paul Latham and Andrew Argue. Also had an opportunity to discuss and build similar ideas with people like Salim Omar and Ron Baker. And through our training over the last couple years, have coached over 1,000 advisors since 2015. Our company has been featured in Yahoo Finance, Wall Street Select, and NBC. Now, in terms of Ken, who I mentioned a few minutes ago, again, we started really working intimately together in 2014, and his background at the time was pretty much what you would call the opposite of mine. He kind of came into this being a big producer. He was doing about 12 to 18 million of annuities a year, somewhere around 600,000 of Target Life, with about 175 million of assets under management. And that's about the level he was at for an 18-year period. And over the last few years, we've really shifted our focus from being in the field, or in other words, being a practitioner, to really being more business owners. And our focus has shifted to working with end user clients to really now working and teaching wealth managers and insurance agents how to grow their businesses by building a virtual family office and partnering with CPAs as well as attorneys and other centers of influence, which obviously we're going to talk about today. So why are we teaching this? Our goal is to lead a movement towards collaboration between financial and tax professionals, resulting in more proactive and holistic planning for clients and communities. The bottom line is we need leverage. We cannot do that on our own. And it makes sense for us to find other individuals that want to build something similar and to help them along the way. You might already be familiar with this concept of a red ocean, blue ocean, but if you're not, let me just quickly summarize it because I think it's really critical when it comes to the value proposition of creating your own virtual family office experience and doing it by partnering with CPAs. The red ocean refers to a marketplace that's very well known, where you have competition that is fighting for their market share. And the idea is it's red because it's bloody, right? It's well established, a lot of fighting. The blue ocean is an unknown market space where you are actually creating something new and the competition ideally becomes irrelevant. So an example of a red ocean competitor would be taxi. You know, the taxi industry, if you were to go out in, let's say, 2017 and try to create a new taxi company, you're competing in a very established, very expensive industry. A blue ocean at the time would have been a ride-hailing app such as an Uber or a Lyft. It's a blue ocean concept or technology. You had unknown market space, you were creating something new, and in essence, the taxi was almost irrelevant to this new market opportunity. So when we look at what we see in most of the wealth management and the insurance space, we're really focused on or playing within a red ocean. That's very unattractive for us. In a red ocean, the companies start sounding similar, the value propositions start sounding similar, the taglines really start sounding all alike. When we start playing in a blue ocean, it's a very different experience. It's no longer about what type of investment portfolio you manage or what type of proprietary products you have. The value proposition itself becomes a completely different story. So a lot of times when we are doing strategy sessions with advisors, it's a 45-minute opportunity for us to kind of understand a little bit about their practice. You know, what we hear is really just more of the same. Well, what makes you unique? I have great client service. Sorry, that's an expectation. Clients expect you to have good client service. I don't charge as much as my competitor. I have access to proprietary products. Sorry, that's what everybody says. And so really, it just becomes more of the same. Now that used to kind of work a little bit, but it's certainly not working anymore because there's some fundamental industry shifts that have been happening over the last 5, 10, even 12 years. Things like major market corrections, technology, outsourcing, scandals like Bernie Madoff, Jordan Belfort, all of these things have actually eroded the root trust that communities have in their financial advisors and their wealth managers and their insurance agents. So this discussion around industry direction I think is an interesting one. And just for me personally, going back to 2009, 2010, when I really started making this shift, I started reading articles that were talking about how the fees were being compressed and how technology was replacing some of the value that we previously could bring to clients. And I thought, harder and harder to make a good living with more and more expense when it comes to marketing. That doesn't sound very fun. Shall I do something different? And that's really still the fundamental question is, which side of the change do you want to be on? And do you want to take some calculated steps in a new direction? Or are you just kind of hoping that you get out before the boat completely sinks? Winston Churchill has a great quote that I love. If you don't look facts in the face, they have a way of stabbing you in the back. So with that, let's shift gears a little bit and go into the first of the 3 steps. Now the first step, as I referenced earlier, is going to be explaining or defining your virtual family office experience. There's 2 more steps after that, and then again a bonus on the 5 details on how to build the CPA relationship. So let's get into this here. The first step is really to define your family office experience. So in other words, what does the family office look like for you? What does it mean? What's the experience that your clients have? What are the service levels that you are offering? So let me back up because I want to talk about why a family office exists and where some of these ideas originally came from. I like telling a story about the 5 blind men in India, right? And they're from a small village, and they all have grown up with each other, and they're blind again. So one day they get invited to go to the palace. And they're all very excited for a number of reasons, but first and foremost because they get to finally meet this amazing animal that they've always heard about called an elephant. And so their host lines them up, and he says, "Gentlemen, I'll walk you forward one at a time." So the first blind man gets to walk forward, and he runs into the elephant's tusks, and it's smooth but sharp, and he thinks in his head, okay, an elephant is much like a spear. And the second blind man gets to walk forward, and he runs right into the elephant's trunk. He says, it's heavy, it's round. He's thinking an elephant is much like a big snake. So the third blind man then walks forward, and he gets led right into the elephant's ear. He picks it up, and it's heavy, it's flat, it's kind of like a large magic carpet. Okay? And finally, the fourth blind man, he walks forward and he runs right into the elephant's side of his body. So poof, it's hard, it's solid, you can't even push it. And he thinks an elephant is much like a wall. And then finally, the fifth blind man is led forward. He runs into the elephant's tail, and he kind of picks it up, and it's thin and coarse. And he thinks, okay, an elephant is essentially a rope. And the host leads them over to sit down and rest for a few minutes. And as he does that, the gentlemen start discussing, the blind men start discussing. They say, finally we know, it's the first blind man, an elephant is essentially a spear. A spear, says the second. Are you kidding me? It's really like a snake, a large, heavy snake. And then the third blind man, there's a snake, a spear. It's much more like a carpet or a rug. And the fourth blind man says, you are all fools. A spear, a rug, a snake, it's really like a wall. It's big, it's strong, it's hard. And the fifth blind man says, idiots, it's essentially a rope. It's thin, it's coarse, it's a rope. And all of a sudden you can hear the arguments starting to pile up, right? The name calling and the fools. And eventually a wise man is walking by, and he tries to raise his voice, gentlemen, how can any of you be sure that the others are wrong? Essentially, each of you is describing only a part of an elephant. So none of you are actually wrong, but none of you are fully right either. So why do I digress to tell this quick story? I do that because it reminds me a lot of the type of communication that we're actually seeing in our industry between different professionals, right? And so here's a screenshot of a couple people making comments. This is actually on Facebook and YouTube and Instagram. People making comments about other professionals. This is an insurance agent is the first one. CPAs are notorious for killing every idea we have for our clients. And then you've got a wealth manager commenting, annuities are basically stealing money from fees with fees factored in. And then you have a CPA over there on the left-hand side. I'd never do business with a so-called wealth manager who can't wear a decent suit. You look like a bum. And then Joseph in the bottom, who's kidding who? I've dealt with too many CPAs to know. Those are a joke. Then you got Paul. Now I know my CPA sold out to one of those other businesses. And then you have finally Kayleen. Why wouldn't a CPA just get licensed so they could do all the work themselves and not have to outsource to you? So what you see is professionals that have no idea about what they're actually describing, and instead they're just name calling, which ends up reminding me a lot of the 5 blind men. So this now leads me to a conversation about a family office. Back early in my career, in 2008 or 9, when I actually started looking at working with CPAs, I had an opportunity to work with a CPA that ran a family office. So that's really where I was originally introduced to it. And I remember Googling family office, and the image you see here is the image that came up on Wikipedia. And although it looked incredible, it was incredibly complicated. I'm a professional and I still don't know what some of these things are. It represents extremely high-end planning for what is typically reserved for the ultra high net worth. The CPA that I had met wouldn't take on a client if their net worth was less than $150 million. Well, that might be great for that client, but I was born and raised by 2 elementary school teachers. And I know from personal experience that even though their net worth is a fraction of $150 million, they would still have been better served by their financial professionals if they all would have come together and worked holistically, proactively in their best interest. So as I got exposed to this idea of a family office, I started thinking there's got to be a way to take some of these same characteristics and apply it to clients in the affluent and the mass affluent space. So when you think about the opportunity to take something incredibly complex and boil it down to something simple that people can understand, there's probably no one better to use as an example of doing this than Steve Jobs. Now, to highlight the difference between Apple and BlackBerry, look at these advertisements. This is the new iPhone 12 advertisement. It's beautiful, it's artistic. Here's an old ad from BlackBerry. First of all, a lot of these words, I don't even know what they meant. But look how complicated and confusing it is. A 3.1-inch Super AMOLED touchscreen, BlackBerry Hub, BlackBerry Key, like what does this stuff even mean? Which again reminds me a lot of the family office slide or original design for extremely high net worth clients. And although a very high net worth client might need all of those things, again, the majority of our mass affluent and affluent clients certainly don't. So our first stab at really boiling down the core essence of a family office looks something like this. We called it the team-based model. This is an image we've been using since 2014. Really talked about the advisor. You see the TBM, team-based model advisor, working with an accountant to support their clients, and underneath the advisor, you had dozens of different professionals. But still, when I look at this now, I realize that's still too complicated. Because what does this actually communicate to a client? I mean, how many clients really need to know what cost segregation is, or what tax credits or ESOPs do, or succession planning? They don't need that. So what we've done is we've really taken the lessons of Steve Jobs and we've boiled it down into the 5 essential elements of a virtual family office. And you can see on this slide here that the 5 core areas that the mass affluent and affluent clients need fall into insurance, wealth management, legal services, tax planning, and then business advisory services. The insurance, when you think of insurance, obviously right away we think of life insurance. Also should include P&C, captive insurance companies, annuities, any type of risk management tool should be within insurance. Wealth management, not only investment accounts and retirement plans, but also private placements, 529 plans, you know, everything that encapsulates wealth management. You have legal. So this could be things like estate planning documents. This could be buy-sell agreements. This could be succession planning documents or other types of legal agreements, things that typically you're going to want to work with an attorney for. You have business advisory services. This is probably the one that people are least familiar with. Business advisory services doesn't mean like selling a key man policy. A key man policy could come as a result of business advisory services, but typically what that includes is, for example, employee culture, maybe key employee retention, maybe succession planning. Are we looking to sell the company? Are we looking to succeed to a junior advisor or somebody younger coming up in the company? Are we looking to take the company public? You know, ultimately, what are the KPIs? What type of business advisory services can we do? And then tax planning, and this isn't just the bookkeeping and the tax returns, but also the proactive tax planning. How do we strategically make decisions to legally minimize the amount of taxes that we are paying? And so what you want to have is an open line of communication between all of these different professionals where everyone is communicating about their one client, and that client exists here in the center of this communication. So rather than getting contradictory advice from the CPA or the wealth manager, rather there's an open line of communication that is flowing both directions on the client's behalf. And the reason I like showing it like this, which is kind of a circle, is think about what this subconsciously represents to a client or a prospect. If you think about a castle, what does a castle often have around it? It's a moat, right? Why? Because it's protection. It blocks things from coming from the outside. Or a castle wall. You think about a child that has been scared. What do they want to do? They want their parents to wrap their arms around them. So this is subconsciously showing that we have a moat around you. These are us wrapping our arms around you. So ultimately, the client is protected. That's what we are communicating. There's an open line of communication between all of the professionals working within this virtual family office to protect the client, make sure we are offering as good of holistic and proactive advice as we can. So going back to Apple here, you see on this screen, Apple has created multiple different products. You have an Apple Watch, you have a laptop, you have an iPad, you have a phone, you have Apple TV. In essence, why have they done that? They have done that because they want to control all of the moving pieces within their client's landscape. In other words, they have created an ecosystem. So another reason why we want to create this virtual family office team is, yes, to protect the client and give the best results ultimately to the client we can, but is also to create stickiness. So another way of thinking about this is your ecosystem. And the slide I have up here shows you this is the elite ecosystem. That's the way we describe it, that we help clients with their insurance needs, their wealth management, their legal, their business advisory services, and their tax planning. And what I would ask is, what is your ecosystem? Do you have an ecosystem that is sticky, that protects your clients, not only from the outside, but also protects your business from your clients leaving? By creating a truly unique ecosystem where you are controlling all of the relationships and the moving pieces, you ultimately remind me of a scene from A Bronx Tale, great film, Now Yous Can't Leave. And it's obviously now yous can't leave because you have created so much value for the client where it's actually painful for them to want to leave you to go somewhere else. Think about if right now I wanted to stop using my Apple phone. It would be painful because I have my Apple Watch connected to it. I have my Apple TV, I have my EarPods. Everything is connected to the Apple ecosystem. So take that same concept and apply it to your business. Here's an example of what happens when you start to develop this type of virtual family office ecosystem. Stephen Burgess is an example. My CPA and I closed 2 cost seg cases, which, if you don't know what that means, cost segregation is a strategy that would fall under tax planning, and it is one of the specialists on his virtual family office. Putting both building owners in a position of not owing any taxes this year and getting substantial refunds. A 3rd cost seg case is on the way. And then you look at the email that he shared there. What's happening as a result of him doing this type of work? My business, it is already beginning to pour. I've got 1 captive insurance company case. I've got 3 cost segs, a $4.5 million missile case, which is a monetized installment sale. I have 2 premium funded life insurance cases, 4 funding solo 401ks, 2 regular but large life cases, and a buy-sell agreement funding potentially large premium financed case, in addition to 2 estate planning cases as well. Here's a quick screenshot of one of those cases that Stephen referred to as a large life case, $544,000 of annual premium. And then here's one of the 401k rollovers. He gave an example of $5.5 million of AUM with that one 401k rollover. So again, the first step to creating that virtual family office is actually describing what is going to be your virtual family office experience. And the key takeaway from step number 1 here is to create an ecosystem. An ecosystem basically gives your client the best overall experience and creates the stickiness where your clients do not want to leave. So this brings us to the next step, step number 2, which is build local, leverage national. I'm going to go into exactly what that means in a moment here, but I first want to talk to you about a new book recently read, very well done, called Who, Not How, by Dan Sullivan and Dr. Benjamin Hardy. Now the premise of this book is that our academic system, as well as all of our exams to get our credential and our licensing, really focuses on forcing us to solve problems by figuring out how to do something. They're making the argument that the better way to solve a problem is by figuring out who do I need to involve to solve that problem for me. It obviously fits perfectly within the virtual family office discussion we just had. If you try to imagine one person to do insurance, wealth management, legal needs, business advisory, and tax planning, In essence, they become a jack of all trades. Really not very helpful to anybody except for maybe the really most basic situations. What we would rather become is an expert within our 1 or 2 chosen areas where we can truly go deep and then figure out who do I need on the team to solve the other problems that are outside of my area of expertise. And so how do we do that? We do that by building local and leveraging national. Ultimately, what we're doing is we're shifting our focus away from competing against other advisors, and instead we're really putting the focus on establishing you to your clients as becoming the go-to person, because they know between you and your team of experts that you will be able to solve their problem. Now let's talk about who do we want on our local team. Competent professionals found in your area. Who is an example of this? Just a good basic business attorney, estate planning attorney, a business banker, real estate agent, mortgage agents, and either a wealth manager or an insurance agent if you're not an expert in either of those areas. And what you're really looking for is for them to understand your value proposition with the virtual family office. You want to make sure that you're communicating with them on a monthly basis at a minimum and become your go-to anytime you have a client that you have needs that are in their area of expertise. There's something called the law of reciprocity, if you're not familiar with it. It's basically the principle is by doing something for somebody else, they are ingrained to then want to return that favor. So by you forming these local relationships, and if you're having a conversation with a business owner, let's say, even if they're not a client, you want to ask them, for example, what kind of banking relationship do you have? A banking relationship? Oh, I work with Bank of America. I don't have a particular banker. Interesting, I work with a really good commercial business banker here in town. I would definitely suggest you sit down with them. See, by doing something like that and then giving that business banker that referral, you're now activating the law of reciprocity, which means they're now going to be looking for something to do back for you. What do you want them to do? Again, you want to sit down with them. You want to explain your virtual family office, and then ultimately what you're looking for is introductions to accountants and other centers of influence that we're going to talk about in step 3, but really help complete your virtual family office value proposition. And then in terms of the national team, what you really want to do is rather than going out and trying to find national specialists, you want to plug into a community that has already done that by leveraging their national team. And on the national team, you really want the high-end planner. So not your basic business attorney or your basic estate planning attorney, but really somebody who's more focused on sophisticated and higher-end clientele. Then you bring them in when you have those unique situations. Maybe it's only once or twice a year that you have this type of situation, but really they should be specialists in niche areas. It could be, for example, risk and expense mitigation. So things like captive insurance companies, cost remediation. Could be tax mitigation scenarios, like somebody who specializes in CLATs and NIMCRUTs, pooled income funds, monetized installment sales, establishing private foundations. You've got real estate strategies such as cost segregation, qualified opportunity zones, 1031s, DSTs, other types of niche specialists. So again, you have 2 types of leveraged national team members that you want to establish, either sophisticated advanced planners like attorneys, CPAs, or specialists that have niches in specific areas. And then in terms of your national team, what are you looking for from them? You really want them to still understand your virtual family office, but you're not going to communicate with them on a monthly basis like you are with your local team. You're really going to communicate with them more on like a semi-annual basis. And you want them to become your go-to anytime you have client needs that are outside of your area of expertise. The reason it's easier to leverage a national team is because it's hard to get on the radar of some of these really high-end planners if you're only going to need them once a year. However, if you plug into a community, let's say with 1,000 other advisors, and they each have a need for them once a year, you can see that's hundreds of opportunities for those high-end planners. Now, a company like ours has spent 11 years building relationships with high-end national planners. So that's an example of what you could plug into. So again, to recap what this looks like, on the local On the local level, you want to establish local relationships with competent professionals that understand your model. And this is probably going to represent the majority, let's just say 80% of your clients' needs, right, are going to be within your wheelhouse, insurance, wealth management, or they're going to need basic things like estate planning, like buy-sell agreements, things that competent professionals can handle. And then you have your national team. And this is for the more esoteric strategies or concepts that you come across. And that's really probably going to only represent 20% of your needs throughout the course of the year. So someone might say, well, if this is 80% of my needs, why do I really need to focus on this 20%? Why don't I just have a local team and I not even worry about them? The reason is because you need to have both in order to obviously equal that 100%, the ability for you to say to a client that I work proactively and holistically with my team of specialists to be able to solve any problem that you have. And by that any problem, that allows you again to establish yourself as the go-to professional. That allows you to establish yourself as the most relevant professional. And this completes your ecosystem. So as a takeaway with number 2, who, not how. You don't want to think about how can you go out and get your tax designation. How can you go out and find out about doing buy-sell agreements and capital split dollar? How do you go out and become a business advisory expert? You want to ask the question, who? Who do I need to complete my virtual family office experience? So step 3, partner with accountants and other COIs. So let me just pause here to talk a little bit about, actually, when I say accountants, you'll see in a lot of our material we say CPAs. It's a little shorter. People know what a CPA is, but it's really not just limited to a CPA. I would say an EA as an enrolled agent, and there's other types of tax professionals that are just as good potentially to partner with. It's really a mindset thing. It doesn't matter as much about the designation that they have. And then when I refer to COI, Center of Influence, right? Other types of professionals, oftentimes attorneys, really good estate planning attorney or a business attorney, or the other one that can work well is bankers. You know, if you have a really entrepreneurial private banker or business banker, they can be a great partner as well. So I talked earlier about the first couple cases I worked on. Those were fun, right? The big annuity cases, then also a larger life case. But I talked about the fact that it took me 18 months to close those cases. So what was the precipice to that? Well, this is a quick story about a client named Mike Stewart. Mike is an engineer, and for those of you that worked with engineers or work with engineers now, you know they tend to ask a lot of questions. So this is after I had broken off on my own. It's probably 2009 or 10. And I'm sitting down with Mike for the 3rd time at a Panera Bread. He had worked 60, 70 hours a week, so he wouldn't meet during the weekday, only on the weekend. So here I am, it's July in San Diego, meeting with Mike Stewart on a Saturday afternoon. I would much prefer to be at the beach teaching my 2-year-old to surf, as you can see a photo of him there. However, I'm here with Mike Stewart. So we're going through his questions, and about 45, 50 minutes into the meeting, he says, you know what, Anton, I like what you put together here. What's next? So I lean over and I start to pull out the paperwork, and as I get it on the table, he says, oh, you know what, real quick, let me just run this by my CPA. Now, for those of you watching this right now, what's that little feeling you get in your gut when a prospect tells you, let me just run this by my CPA? It's never a good feeling. And that's not because we're trying to like pull one over on the client quickly or do anything that's not in their best intention. The problem is, as soon as we release control to the CPA, we have no idea what happens behind that black curtain, right? And so hesitantly, I say, well, of course, you know, I would love you to get your CPA's input on this. Rather than just send everything to them, why don't you introduce me to your CPA? That way we can have a conversation, hear what any concerns they have, and you know, and then that way we can get back to you kind of collectively. Mike seems like that's a good idea, so he agrees. So he reaches out to the CPA. CPA gets back to him and says, you know, unfortunately, I'm just too busy. Just too busy. I'm going to write that down because I'm sure there's a lot of us that have heard that from CPAs. Too busy to speak with, Anton, but I'll give you my word that just have Anton send you everything. I'll take a look at it and I'll get back to you. So I send Mike everything off on a Monday morning. And unfortunately, Tuesday, Wednesday goes by, Thursday, I get a 2-sentence email from Mike that says, "Hey Anton, unfortunately I heard back from my CPA. He's not comfortable with the plan that you put together." Not comfortable. And to this day, I have no idea what not comfortable meant, right? I had no opportunity to speak to the CPA. I actually responded to Mike via email, who didn't respond. I picked up the phone and called Mike, who didn't answer. Never had another communication with Mike after that. But what I did do is I basically decided that was the straw that broke the camel's back. It brought me back to the Smith-Barney days in the early 2000s, where the big producers in the office were closing clients by working with the CPA, not waiting until the 1-yard line and then having the CPA blow up the relationship. And so I determined at that point that I was no longer playing battleship with my business. Do you remember that game? Did you ever play that as kids? You know, where at least when I was a kid, you'd sit behind this little plastic board. You choose an area where you thought your opponent's battleship might be, and then you threw a metaphorical bomb, and you just waited. And you either went, and then you heard silence, which means you hit nothing, or which means your bomb hit their battleship. And that was the goal of the game. And that's what I felt like in my business, was like I had a certain degree of control. I chose certain things, and then I just threw bombs over the wall and waited to hear if they hit. And that was how I was growing my business. That is not a good way to grow a business. It's not a good way to feel like you're living, your livelihood of your family depends on that. That's terrible. And so finally I did decide I'm going to go back to the Smith-Barney, build the CPA relationship days, and invest that time and energy to do that. That's what began that 18-month learning curve of stumbling through blindly all of these opportunities. And ultimately, I was fortunate. About probably a year into it, I was introduced to a CPA, as I referenced earlier, who worked with high net worth clients. He was the personal CPA to 5 family offices that ranged in net worth from $1.5 million to $1.2 billion. So I'll never forget this conversation with the CPA on how he got into the family office space. What he said is about 20 years into his practice, he started to recognize that their very best clients preferred proactive and holistic planning. So I wrote these 2 words down that he talked about: proactive and holistic planning. Now, let's take a minute to actually break these down and what each of these means. Proactive means we're getting ahead of the client in seeing their needs and seeing their problems. It does not mean we're waiting for them to call to tell us that a parent passed away, they got married, they had a child, they want to start saving for retirement. It means proactively being involved in their lives and asking them what's going on to see around the corner, okay? So that's proactive. And then holistic. Holistic means taking all of the parts into account before analyzing the potential results. Holistic. Now, I've asked dozens of clients, what would you prefer? A proactive planner or a reactive planner? I've never had a client tell me I prefer reactive planners. And I've also asked clients, what do you prefer? A holistic planner, taking all of the moving pieces into account, or somebody who's just trying to come in and sell you one thing to address one problem? And again, I've never had a client tell me, I don't like holistic planning. Unfortunately, a lot of professionals, CPAs, attorneys, financial advisors, insurance agents, they work reactively in their own silos. And whether that's because they're too busy to form those types of relationships and have those kind of conversations, or they're worried about compliance of mixing the water, or they don't have the other types of relationships with professionals, it is not acceptable to work in your own silo. Your clients need your holistic planning. Imagine how dangerous it would be if the same dynamic was to occur within doctors and nurses. Like, if they didn't communicate with each other and they didn't share their notes, they didn't share medication on what they were prescribing you, that would be malpractice. That's life-threatening. The same mindset should take place between all of the financial professionals working on behalf of a client. So here's where this gets interesting, because I talked earlier about the industry shifts within wealth management and insurance. Simultaneously, there are also massive industry shifts going on in the accounting space. And that's why this is such a kind of a perfect storm opportunity right now to really not only create your own family office, but to do it by partnering with accountants. Okay, so we were at an event probably 6 years ago now where the managing partner of a large accounting firm stood up and he said, "Ladies and gentlemen," this was to the tax partners of the firm, by the way, he said, "Tax planning and audit services, or tax returns and audit services, are dead. Our future, if we are going to exist in the next 10, 20 years, comes from planning, proactive planning services." Now, why would he say something like that? There's a number of reasons, one of which is what I referenced earlier affecting us as wealth managers and insurance agents. It's the commoditization through technology and outsourcing. It's price compression. But there's other factors too. Look at Trump's tax plan, right? The Tax Cuts and Jobs Act. Do you realize that what that did is itemized deductions dropped from 46.5 million in 2017 to 18 million in 2018. Again, that means 46 million itemized returns were filed in 2017 and only 18 million in 2018. That significantly reduces the value that a CPA can bring their clients. Because if you're itemizing your deductions, you have a lot more variables and a lot more flexibility. But if you're just going with the standard deduction, it's basically just filling out a form, and there's very little difference at that point between an H&R Block return and paying my CPA $400 to do the return. So what they're being forced to do is identify the new revenue streams. That's why you see a lot of CPAs going out and getting licensed. They're trying to sell annuities, sell life insurance. They're trying to manage assets. They're trying to bring more value to clients. The problem is, again, you go back to now the jack of all trades. How many things can you actually do well? Do you think you can actually be a good tax planner, a good investment planner, a good insurance planner? I'd argue that's at least 2 people right there, if not 3. So the more things you try to do, the less quality you're going to do in all of them. Again, it goes back to Dan Sullivan's view of who, not how. So although there are a record number of CPAs and accountants going out and getting licensed, it is not the solution that by far the majority of them think it is going to be. And you already see a lot of them failing in that industry. Accountants want help, but not in the old way, right? They don't want to go out and get licensed and become a jack of all trades. They don't want to just refer their clients out. What they really want and need is a team of professionals to help them deliver more value while ultimately allowing them to work less. And that is at the heart of a virtual family office. How? Leverage. Leveraging who, not trying to become a jack of all trades by doing it how. So we don't want to go out and get the CPAs to start referring us all this business. The referral model is broken, it's old, it's outdated, it exposes the CPA to more risks. CPA loses control of their clients. They manage, new relationships with all these kind of referral systems and referral professionals, and they also miss an opportunity to differentiate themselves. So this is an important mindset shift as you are approaching CPAs, and really what you're looking to do is approach the CPA and make them the priority, that relationship, rather than focusing on their clients. Your goal is to elevate the perceived value of the CPA in the CPA's client's eyes, rather than just focusing on trying to get a referral to the client. Does that make sense? So you're less focused on the transaction, you're more focused on the relationship. And when you form that relationship correctly, and the two of you really start to work together, if you think back to the virtual family office diagram that I showed, think about those 5 key positions, right? You had insurance, wealth management, you had legal services, business planning, and tax planning. Now all of a sudden, if you can form a really good relationship with 1, 2, maybe 3 CPAs, you've probably taken care of 2, if not 3 of those core areas. That's why we say the CPA and the advisor really can form the core of that virtual family office. And then the 2 of you together are a much more attractive partnership for your local relationships and for your national relationships. So finding those good attorneys, business advisory services, and any other specialists that you need are going to be much more attracted to what the two of you have created. Now, let's talk about the win-win-win of this type of relationship with a CPA. This is how we try to approach every engagement or business relationship we're entering into, as a win-win-win. So first of all, from your perspective as the advisor, why would you want to form this type of relationship with a CPA? There's a number of reasons. Let's kind of go through them one by one. Obviously, a higher closing ratio. When the CPA actually introduces you to a client, not just gives them a referral, like a name and a phone number, but actually has a proactive conversation about them coming into the office or meeting via Zoom if you're virtual, and sitting down with you and their new partner, with them and their new partner, you, your closing ratio goes through the roof. It's not uncommon if you sit down with 10 prospects to be actually moving forward with 7, 8, or 9 of them because of the transfer of trust from the CPA to you. So that's a win. Closing ratio. Also, the size of the cases actually tend to go up because you're now integrating a tax planning conversation with the CPA. The quality of the clients goes up because actually you are helping coach the CPA to identify the ideal types of clients and prospects that you can bring the most value to. So closing ratio, better clients, higher revenue, and then also your marketing expenses go significantly down. In essence, there is no more marketing expense, right? Because the CPA is actually introducing you to the new clients. So there's a series of wins for the advisor. Now let's talk about it from the accountant's perspective. Again, accountant or CPA, enrolled agent, etc. The accountant, why would an accountant want to do this? They are now bringing a more unique and valuable offering to the table for their clients. It's no longer, I charge $300 for a personal tax return and $600 for a business tax return. So does everybody else. Where's the unique value proposition? The unique value proposition is the same story they can tell that you can tell, which is Mr. or Mrs. Client. Through my own expertise and a team of professionals, we can offer you proactive and holistic planning to make sure that all of your financial, tax, legal, insurance, and business needs are handled under one roof. That's a unique value proposition. So they're increasing the client value. The other thing they're doing is they're increasing their revenue. You should absolutely be willing to share revenue for the clients that the accountants are bringing to you, right? Whether that's insurance or if it's on the asset management side, they could get licensed. They could do a solicitor's agreement. There's other ways to do that. So it's increasing their value proposition. It's increasing their revenue. And the other thing it's allowing them to solve better problems. You know, I've spoken to a lot of accountants recently that say, I'd be happy if I never filed another tax return again. I just want to proactively solve clients' problems. So it's a more fulfilling opportunity. And then finally, they get to spread out the revenue rather than having all of the revenue come in during tax seasons, which also mean 80, 90, 100-hour weeks. They spread out the workload, they spread out the revenue, better work-life balance. And then finally, from the client's perspective, why is this a win-win-win for the client? Well, first of all, I said it a minute ago, it's all under one roof, or another way to say that is I now have one point of contact for all of my client needs. I have a much more proactive and holistic relationship with my professionals. I know that regardless of what's going on, somebody is going to work on a team of professionals to help me get my problems addressed, which means better end results. Paying lower in taxes, better legal situation, better wealth management scenario, better prepared from an insurance perspective. So it's absolutely a client benefit as well. And that is why we like to call this a win-win-win scenario. So I want to share another example here of a fun story with an advisor that we were working with. And here's a couple of messages she sent us. If you build it, they will come. I've not been able to stand up from my desk all day, working on a new cost seg, multiple CEs and a captive. Then the accountant drops a major brand new case on my lap. this time last year, I was wishing a CPA would respond to my outreach and still dealing with dinner seminars. Don't give up, it just takes time. And then she also says, the hardest part of closing a tax planning case is sitting in silence while you're both waiting for the client to leave before you jump up to congratulate each other. Then she goes on to say the CPA who closed his first case 2 weeks ago for $6K just closed a second for $10K, which she obviously participated in. She said, and we uncovered that this client is a whale, but didn't even know it. Already throwing around numbers for his annual planning fees starting next year. Love it, great example. Key takeaway number 3, you don't want referrals. So again, referrals, outdated. The old way that advisors and CPAs used to work together. What are we looking for instead? Relationships. So relationships, referrals, outdated. Relationships, where the two of us are working to partner together to offer more of that ecosystem. And then by adding our local and national team, we are completing that family office experience. In recap, the 3 steps to offering a virtual family office through CPA partnerships. First of all, defining that virtual office experience and creating your ecosystem. Second, build local and leverage national. Again, it's not how, but who. And then third, partner with accountants and COIs. Remember, get away from referrals and move towards relationships. So now let's get into the bonus secret I referenced earlier, and that's really the 5 phases of a CPA partnership. The first one is to identify, then contact, third is engage, fourth, monetize, and fifth, maintain the relationship. So let's dive into each of those in a little bit more detail and talk about what it actually means. The first one, identifying the ideal partner. Now, a lot of advisors, wealth managers, insurance agents have gotten frustrated because they go out and they meet with 5 CPAs and they don't have luck with any of them. And it's kind of like throwing spaghetti at a wall to see if anything sticks. The problem is, even before you have that conversation, you need to decide who are you actually speaking to. Here's some rough rules of thumb of what you'll find the most success in. Ideally, the partner of a small firm. If you get more than 3 partners, it gets really complicated. So I'm going to say 1 to 3 partners. Also, ideally they're still 10 years or so away from retirement, right? So let's kind of say maybe 55 or younger. And geography doesn't matter as much anymore. We're seeing great partnerships where the advisor's in Florida and the advisor's in Indiana, California and New Jersey. That doesn't matter as much anymore, geography. But what does matter is the partnership, the age, just because of their willingness to actually make changes, the type of clients they work with. The more business owners, the better. So we want at least, ideally, a 50-50 mix between business owners and W-2 employees. And that kind of can fit with your niche and who you're excited to work with. But the bottom line is, the more business owners, the more moving pieces, and therefore the more valuable the virtual family office is to those clients. And then probably the most important thing, even though I just went through all these, the most important thing that trumps it all is mindset. Mindset. In our first meeting, we have all of this scripted out with talking tools, but in our first meeting, we're looking for a couple core things. And one of them is, do they have the right mindset? You don't want to have to convince them that their industry is changing. The ideal mindset is they already know it's changing, they just don't know what to do about it, and then all of a sudden you're the solution. So you want to make sure they have the right mindset, they're willing to partner, and they want to actually help clients. So that's identify. Contact. This is super important before you even before you even sit down to have your first meeting with them. What is that communication like, and how are you being positioned? Ideally, the best way to get introduced or to find potential CPAs, enrolled agents, attorneys, is through warm contact relationships. That can come from clients, that can come from prospects, that can come from friends, family members, or other business professionals. Now, it's not the only way. In our training, we go through about 12 different ways to do this, but it is going to be the most effective way. And the key thing that I want to touch on here There's a lot to this, but I just want to touch on a couple key takeaways. Is you always want to make sure that this communication on how they are contacted is scripted. So if it's coming from a warm relationship, what you're going to do is you're going to provide them with a copy of an email that you want them to send to their CPA. It's going to be very short. 2 sentences. 1 sentence about you, 1 sentence about them. They're sending it to you and the CPA. They're CCing you, and then you are responding to that CPA with a very short professional message suggesting the next step, which is to get together for either a Zoom meeting or an in-person meeting. But the bottom line is you want that scripted. You don't want to leave that to chance. You don't want a name and a phone number. You want an introduction, not a referral, in a scripted intro. Okay? So the third is engage. This is a multiple step meeting process to engage, which means formalize the relationship. You don't want to leave this to chance. The CPA says, wow, this sounds amazing. I'll think of a client next week and send them. No, they won't. It'll be 12 months, you won't hear from them. What you want to do is follow a scripted process that ultimately leads to an agreement. Now, we always teach to have these agreements in writing. It doesn't need to be necessarily a legal document, but it should put some expectations around the relationship. What they are going to do, what you are going to do. You have them sign a copy. You sign the copy, both of you get a copy. So anytime they start lacking on fulfilling their expectations, you can hold them accountable. The third is monetize. Monetize basically means at the end of the day, this thing has to make money. Money is not the most important thing in business or in life, but it is the fruit that the tree has to produce. If the tree does not produce fruit, it is not sustainable. So you need to make sure you lead them through a monetization process with all of their clients. We are always looking for 2 to 3 new client introductions a week, regardless of the time of year, and then finally maintain that relationship. This should be done by weekly meetings. If it's a new relationship and they say they're so busy, at least meeting every 2 weeks. But you don't want it to go out more than 2 weeks where you're meeting with them consistently to talk about clients, cases, next steps, priorities, addressing problems. You need to maintain that relationship. And then above, obviously, meetings, look for things to do that are fun. Concerts, golfing, fishing, surfing if you're like me in Southern California. Whatever it is, you want to maintain that relationship. So those are the 5 steps. So I'm going to wrap this up here, but if you still feel like you need to see more reviews, you can go to our webpage. We have a reviews tab there with advisors, accountants, attorneys, leaving feedback on what their experience was. But the point is, this stuff really does work. And let me ask you a question. Are you excited about some of the ideas that we just talked about? Are you also feeling a little bit like kind of drinking from a fire hose there? I know it was a lot of material. Hopefully I'm going to wrap this up and provide a little bit of light at the end of the tunnel. So option 1, we just gave you enough information where you're dangerous. You could go at it alone. Try to figure it out and maybe get lucky. Or you can plug into a team with a proven process. Spend time, money, and resources trying to figure it out and get frustrated. Plug into scripts, a community, a specialist, and a virtual family office that can support you in this entire process. This is you investing your limited resources on figuring out how. This is investing in who. How do I do this versus who do I need to do this? Now, if you are interested in option 2, let me talk a little bit about what that looks like in terms of how we work with advisors and insurance agents. If you move forward in our training, first of all, what you're going to get is a full training manual of all of the scripts, the email templates, everything you need in order to build these types of relationships with the CPAs, how to approach them. And then we'll also give you the appendix, which has all of the information on the virtual family office, the different types of specialists, how you're going to communicate with them, what their contact information is. So everything you need from scripts, email templates, and mindset training is here. Additionally, we give you all of the collateral that you're going to want when you actually are sitting down with not only CPAs and other centers of influence, but also prospects and high net worth clients, so you can actually describe your value proposition to them. We give you full flow charts, walking you step by step through the model, exactly what you need to do. And you get stuck at any point through the process, we are there to support you and coach you along the way. We do live group Q&A calls, we have live events, and we have a live community with over 1,000 members and 12 coaches in that community. We also have other types of material that you can use, business planning checklists, retirement planning checklists, accounting checklists. These are things that you can give to your local relationships as well as your CPA partners to really help them understand exactly what they should be looking for in terms of the potential prospects that are a good fit for you. We've seen these, and you can white label these, put your logo on them, put the CPA's logo on them. We love seeing these in CPA or attorney's waiting room when their clients are waiting to meet with them with your logo on it. We also have invitations multiple times a year. We do events either in person or virtually where you can come out and hear some of the virtual family office specialists present. You also hear from myself and some of my other partners where we'll talk to you about what's changing in the industry. We'll also speak to your CPAs and attorneys at these events where we actually give them an understanding on how to fully plug into what you have built with your virtual family office. I mean, it is truly a first-class machine that we are giving you the opportunity to just cut off the 11 years of work we've done in figuring this all out, shorten that runway, and plug into what is built. Before we wrap up, I wanted to show you a couple fun photos. This is a screenshot of some of the coaches you might have the opportunity to work with. I also wanted to mention our client information questionnaire. It's a proprietary questionnaire that we built with some programmers out of the US. And what it does is it allows a prospect or client to actually sit down, go through a series of logic-based questions. And then it uses algorithms to analyze the information and point to potential specialists in your virtual family office. A pretty incredible system, and I think that alone is a tool that separates you from advisors. Here's a couple of photos from live events. You heard me reference those. Both Elite Growth Academies, TAC Planning Academies, Elite Advisor Academies, really just where we get a chance to get together and put some of the top thought leaders and technical specialists in a room available for you to access. In essence, what I'm trying to communicate is that it is everything that you need in order to shift from the blue ocean. Remember, I opened up with that discussion of the red ocean versus the blue ocean. Everything you need to shift from the red ocean to the blue ocean, and you can see a number of comments from students there talking about what that experience is like, uploading photos of their ideal blue ocean and how they have got there through our training. So if this sounds interesting to you, over the next few days, we have set aside time where we can actually sit down. We'll talk with you a little bit to see if we can help based on your current situation. I'd like to carve out 45 minutes or so. We'll map out an exact action plan to get you from where you are to where you are trying to go, and then focus on that plan to understand whether or not we can be that team member that can help you along the way. Honestly, I have heard advisors say this is the most valuable 45 minutes that they have spent in their career. And I'm a big fan of Peter Drucker's quote, "The best way to predict your future is to create it." So in closing, it really doesn't matter to us what RIA, BD, IMO you're at. It doesn't really matter if you're in a big town or a small town or really where you're located. It doesn't matter what licenses you currently have or you don't have. What matters to us, and actually what we really care about, is one thing, and that is getting you results, helping you evolve your business. So if this does sound interesting, we are limited to the number of advisors we can onboard in any given month. So please take a minute right now to apply for a free strategy session, and we look forward to talking to you then.